Hello everybody, welcome to the technical analysis webinar. My name is Troy, I'm a senior account manager with AvaTrade. I'll be leading the session today. Before we get going, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, I've got enough responses. Looks like everything is up and running fine, and we're ready to have some fun looking at the markets and potential trade opportunities. Jean, welcome from Montreal. Good to have you, and everybody else. So as we get going, some things to keep in mind. There's risk with every trade that you make. No one trade is guaranteed to profit. I think we all understand that. But certainly there is the opportunity for profit with each and every trade, which is why we're all here. Hammond, yeah, this is a live webinar. It is. So welcome. And by the way, good question. There are recorded webinars. All of the webinars are recorded, including this one. And the recorded webinars are found on our YouTube channel. So ask your account manager for a link to the proper page on our YouTube channel, and all of the recordings are there to go back and learn at your own pace as well from all the strategies we've gone over in the past weeks and months. To continue with what I was saying about risk, obviously there's a good potential for profit as well with each and every trade, but managing your risk in a way that makes sense for your balance, for your risk tolerance also is something that you probably want to think about doing. So because there is risk involved with each trade, you may think about using a stop loss, maybe hedge trades. We've talked about hedge trades in the past, how to use that as a potential risk management strategy. Also, if you use the AvaTrade Go mobile app, which is found, there's a link I'll show you on our website as we get going. That mobile app allows you to trade on your MT4 and MT5 accounts, but also offers some special features for managing risk, meaning as you're setting up a trade on the mobile app or on our web trader platform, both have these features, which are both very nice for risk management. As you're setting up a trade in the order window and you put a stop loss price, it tells you how much you're risking to that stop loss price based on your trade size and where you put the stop loss price. Same for the take profit. It'll calculate for you your potential profit on the move. All of this before you place the trade, before you buy or sell, you'll have this information in front of you. And so the AvaTrade Go mobile app and the web trader platform both allow you those tools for managing trades as you're setting up trades. And when you place a trade through those avenues, they show up on your MT4 and MT5 accounts. It's the same account, just some additional user interfaces that maybe are more friendly for trading with. Now, and you'll see another feature called AvaProtect through those platform options that allows you to protect against losses for defined time periods on gold, silver, FX pairings. So there are a number of assets that you can use that feature on. There are some areas in the world, I believe Canada, maybe some other locations where we don't have that particular product available, but hopefully eventually all of the offerings are able to be approved in every one of our regulated jurisdictions where we hold regulations. Okay, so as we go forward, then keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, technical analysis, real quick, what is it? It's basically looking back at the history of the chart. And the reason I'll go over this part real quick is we do have some beginners at the webinar, which is just fine. And it's good to review these ideas for advanced traders as well. And soon we'll be on the live charts. Now, what is technical analysis? It's looking at the historical movements on the candlestick charts, are usually the type of chart that traders are looking at, and looking for patterns, looking for price levels that maybe the movements have trouble breaking, or that the movements have trouble going above or below, or that they tend to reverse off of. So these types of technical analysis of charts sometimes help you develop strategies that like a checklist of items. If I see this and then this happens, then I'll trade and do ABC. So, and that's the sort of thing we go over in the webinars, and we will today. Some ideas of technical analysis on the chart. And you could do this manually, which we certainly will do today, where we draw our own price level lines, trend lines, etc., to find opportunistic entry points and exit points. And you also can use indicators like Fibonacci levels, RSI, any number of indicators that are available to help guide you in that analysis of the chart. Okay. If anyone has any questions, if you want to give some input as we go along, please do so. I'm happy to share with others your ideas, your insights, and also to answer your questions as we go along. So what we see here then, well, first we're on the website. This is AvaTrade's website. Let me first show you where you find the AvaTrade Go mobile app. I think it's important that you know where to find our platform options. So you can see, you can download the PC version of MetaTrader 4 and MetaTrader 5. We actually have an options trading platform. It's a different style of trading. It'd be nice if you want to look into that, learn how to do options trading as well. You can talk to your account manager about it. AvaTrade Go is the mobile app I was just talking about. That's downloaded from your Google Play Store, your Apple App Store, and it has all the features I described. Ava Protect for protecting against losses for defined time periods. If you put the take profit or the stop loss, it calculates your risk and your exposure for you, so you know before you place the trade those the level of risk and potential profit to those price levels that you enter. You also can do pending orders from here, and it makes pending orders more simple as well by just asking you what price do you want to buy or sell from, and it'll make it the right type of pending order. For those of you that aren't familiar with pending orders, there are 4 types: buy limit, buy stop, sell stop, and it can become confusing as to which one is which. The app makes it very simple. You don't have to ever see those technical names. You just tell it, where do I want to buy or sell from, and it'll make it the right type of pending order. And the same if you log in here to the WebTrader platform, which is accessed from this login on our main website. It has those same features. Okay, so very nice to use. Let's take a look quickly at the fundamental news today. It's not a big news day. Really, it's been relatively slow. Economic announcements that came in, some negative announcements for the euro, and then some pretty decent ones out of the European Union coming in at expectation for a lot of important economic numbers that came in. But other than that, pretty flat day until later. There'll be some announcements soon out of the US that are pretty high level announcements, core retail sales out of Canada, some big announcements coming, and some announcements later in the day on industrial production out of the US and consumer expectations, etc. So later in the day, a slew of announcements, especially out of the US, that could likely move the markets quite a bit. Okay, so there were no major announcements out of Great Britain today. We see a couple small ones, car registration numbers, and that's it. But there has been some movement on the pound, and I think some of that is around speculation about the effect that the rising outbreaks could have in different regions of the world, and also speculation about interest rate changes and possible stimulus and those sorts of things that tend to move markets locally and somewhat globally. Yeah, there was a big movement. I understand that. And maybe there's some renewed fear, Darren is saying, about the Brexit situation. That's possible as well. What's nice is we're about to take a look at the charts and show you how you can take advantage of those movements, whether you know why the movements happened or not. Since today's a technical analysis focus, that's a good thing to show here. So we'll go take a look at that real quick. So real quick here, you can see a market overview. We've got the futures are in the green. What does that mean about sentiment if the US futures are in the green right now before the US market opens? Is there general positive sentiment or negative on the markets? US futures are green. Probably positive, right? I'm with you, Mohammed. And so what about the volatility? You see the VIX volatility index, it's in the red, meaning it's dropping. That's actually good news for the markets, right? When volatility is dropping, that also means positive sentiment. Now, it didn't drop much. It's actually pretty flat. You know, you sometimes will see it down 10%, 12%, the volatility index. Then you think, wow, the market's going to surge up. And many times that's the case when you see the fear index, as they call it, the volatility index. When you see this VIX index drop way down, like over 5%, 10% down, then usually there's really good news for the market on that day. And the opposite, if you see the volatility index up, usually you see then the futures are red. And the more red the futures are, and the more green the volatility index is, then you're expecting the markets to drop down quite a bit. Especially when the US market opens, it creates a larger volume, a larger surge of trading, and that sentiment many times drives the direction that you can expect the movement. Okay, so a little bit of fundamental news, fundamental concept thrown in. Let's go ahead and do our technical analysis now. So we've got slight positive sentiment today, not huge, just slight. The futures are slightly in the green. The volatility, the fear index is just slightly down, but not much. Okay, that's the situation. So pretty flat overall, but trending towards positive momentum. That's important as you go to look at the charts to understand, do I prefer to trade in one direction or another? Which way is the wind blowing? Then when you do your technical analysis, you might have a preference of which way you prefer to find a good entry point. So I'm looking at the S&P 500. We know the sentiment is slightly positive. We see on the 5-minute candles what's been happening today. Up, right? The movement is up over the past hours. Okay, so it did pull back to this slope. Okay, in trading, we might call this an alleyway or an uptrend. It's going in this alley. The high points are here, the low points are here, and when it hits the top, it drops. When it hits the bottom, it pops up. It hits the top of that alleyway, it drops. So now it's at the bottom, and you might say, okay, this is opportunistic. It's an uptrend. I've caught a low point in an uptrend, and the sentiment today is positive. So maybe I say, wow, I like this market move then. And so perhaps I take a shot at a market move because I happen to find it in a location that maybe makes sense to me. Now I'd say, okay, where might I bail out on a trade like this if it goes the wrong way? Because the sentiment could swing. Things can change, right? So I'd say, okay, if it breaks this support level, you see this was resistance, resistance down, resistance down, resistance down, resistance down. Then today, positive momentum, it broke the resistance and now broke it again, and it's above that resistance, which now should be support. Okay, whatever caused it to break above this resistance level theoretically should keep it above now. So instead of resistance, now it should be support. Whatever good positive momentum existed, we're assuming still exists unless the news has changed. And so we're trying to trust maybe the support level. And if you're scalping the market, you'd say, okay, I'll put my stop loss just right below that support level then. If you're a more patient trader, more of a longer term move, you might say, I'll put my stop loss below not just one support level, but below the second one. And if it breaks the second support level, then I'll get out and have my stop loss down there. That's up to each individual preference, right? If I'm scalping and just getting in and out quick, I might put my stop loss just below the first support level and put my take profit at the first resistance level up here, okay? And so we could do that now. And so below the support level would be 34, let's say 78. So I go in, and I could have put the stop loss before I opened the trade, right? I didn't have to open it and go back and modify. 34.78. Okay. There's my stop loss. If it hits this price, that means it broke this support level, and maybe we were wrong that it was going to bounce off of it. And you get out with a small risk. Okay. Take profit, the first resistance level up here, because it's not huge positive momentum today. Maybe you decide, I just want a small profit. I'll scalp the profit. with almost an equal potential profit compared to risk, and take the profit if it hits 34.86. Okay, so then I say modify 34.86, and there it is. So here's my take profit, here's my stop loss. Maybe I look and I say, I don't want to risk that much. Let me move my stop loss up just a little bit. There, that's still below the support level, right? Here's the support level. If it breaks and hits here, then maybe you give up, right? So you can adjust these after you create the lines. You can adjust as you look at the technical analysis and say, no, I'd rather have it just a little closer there. Okay, you can drag them around. You could change your mind even more and say, you know what, I want to be really patient with this move. I'm going to go below the second support level. So I'm okay to risk all the way below the second support level, depending on my trade size, right? What can you do so that you don't have your stop loss too close? Maybe it would come down, break the support, hit your stop loss, then go the right way. And had you had your stop loss below 2 support levels, you widen the strike zone, you get less of a chance of that happening. You can be more patient with the move. What would I do with my trade size when I was opening it if I knew I wanted my stop loss further away so I could be more patient? If I didn't want to risk more, I could have my stop loss further away, but take a trade size that was what? Correct, smaller, right? I could have a trade size that's smaller. That would allow me to put my stop loss further away, below maybe 2 support levels instead of 1, allowing me to be maybe more confident that I'll come through with a profit up to this resistance level. Okay, so you don't always necessarily want your stop loss to be less risk and your take profit to be a larger potential profit. Sometimes you might look at the chart and say, you know what, I'm more likely to win if I have my stop loss further away and I have 2 support levels protecting my stop loss, and I only need to go a short distance to my take profit. My win percentage will probably go way up, right? In that case, you'd need to be right more than 50% of the time because you're making more than you're risking, or I'm sorry, making less than you're risking if your stop loss is further away than your take profit is. But that's all up to each individual strategy, as long as you understand what you're doing as you go into it. With this move, as I alluded to, I felt like this was a scalping move because there's not a huge trend one way or another today in terms of sentiment. It's slightly positive. So I'm going to go with the initial idea with this simulated trade. I'm risking just below the first support level. If it breaks it, I'm out. And I think it'll hit the take profit because the sentiment's in my favor before it breaks the support. That's the concept here, okay? And it looks like it's trying to go the right way. We're up about $4 on this small trade, okay? By the way, does anyone know how much do you have to make per day, percentage-wise on your balance to double your balance in, say, 6 months? How much would you have to make per day to double your balance in 6 months, percentage-wise? It doesn't have to be much. And the idea here is if you take small trades like this, and you could pull $7, $10, or depending on your balance, you know, $100 could be a small gain, $1,000 could be a small gain, depending on the size of your balance, right? You could scalp profits like this. You see, I went with the sentiment, and I can take these small profits. If I gain even 1% on my balance per day, right? If I have 10,000 in my account, 1%, you know, 100 is 1% of 10,000, right? And so if I can gain 1% per day, it seems small, right? A small gain, 1%. But that makes you about 20% a month if you can average 1% a day, right? And then you say, what's significant about 20% a month? And I know some of you are saying, wouldn't that be 30%? There's 30 days in a month. There's only like 20 trading days in a month, approximately. So for each trading day, if you average a 1% gain, and I don't mean every day, you might lose a little some days, gain a couple percent one day, but if you can average even 1%, that's 20% a month approximately. You would more than double your investment in less than 6 months. right? And if you realize it's compounding, 1% would become a larger amount each month as well, so it would go even faster. So my point here is you don't have to have huge exposures percentage-wise. You don't have to go after huge moves to make a really nice return, right? So that you have to think about that in your risk management plan and understand it. If I'm going with the momentum of what we looked at, we figured that this movement would bounce at least temporarily off the support line because the sentiment currently is in that direction. We didn't give it enough time for the news to change. So we trusted the support level and up went the bounce, right? And likely it's going to test this resistance level up here before it ever breaks the support level, okay? You make a few moves like that every day or even more. That's called scalping the market. You really can find some great returns when you add up all the small percent gains that you can have in that sort of trade. Okay, so very nice. And we didn't look past the 5-minute candles. That's a pure scalp move. Looked at the fundamentals, looked at the sentiment, knew which way we preferred, found a nice support level to trade up from in the direction that we expect the sentiment to take it. It was an opportunistic entry point close to the support, and away we went. And up it went, okay? So what else? Let's look at another asset. Anyone have anything you'd like to look at before I suggest? The GBP, okay, I already saw that. Let's take a look at the GBP, maybe against the USD. In general, does anyone know what is, we can look at the Dow Jones, it'll be similar to the S&P 500 and the NASDAQ. They're doing the same thing, but we'll look at it in a minute, Darren. The Dow Jones just tends to move a larger number of points than the S&P 500 because it's got a larger value per indice. Gold, oil, Dow Jones. We'll look at those after we look at the GBP. Okay. So, I was starting to say, what's the value of the USD do usually when there's positive momentum on the markets? Lately, anyways, it's been weakening, right? The US dollar's gotten weaker as the stock market went up. And when there's fear in the markets and the stock market's been dropping, the USD strengthens as a safe haven, kind of like gold, okay? And so because the stock market's been reaching new highs, even through the pandemic, amazingly, the US stocks have been reaching new highs. The USD's been getting kind of weak. It's been weakening. And so that could be helping the pound, the movement of the pound and the euro, et cetera, against the USD, helping some of the technical breakthroughs and bounces. So here's the GBPUSD. We see some good ranging movement, a spike down, a bounce, back up, okay? So if we then, let's go to 15-minute candles, see a little bit bigger view. This looks like it's trying to climb back to this resistance level up here, okay? We see it hit here and plunged down. And then it hit again, that same spot right there, and plunged down. So it looks like it might try to reach that level again before either dropping or breaking through. So two potential moves I see here. A sell limit from here, 129.55. How do you do a sell limit? Go to pending order. And by the way, if you use the app, it's much easier to do a pending order. The AvaTrade Go app or the web trader platform, you don't have to pick which type of pending order on the AvaTrade Go app and the web trader platform. But here you do have to pick the right type. So if we're going to sell from a higher point, that's a sell limit. And then you program the higher price, which we said, let's say you'd want to sell from 129.55, 1.2955. You put your stop loss above the resistance. If it breaks through, you get out. So 129.65 maybe, 10 pip risk, just as an example. Okay, risking 10 pips, selling from 129.55. If it drops like it did the last time, it could come down to this support level here, but maybe you're more conservative and you say if it hits this support level here, you'll take profit. So let's say 129.10 or 129.12, 1.2912. So my potential profit, if this was a winning trade is what, about 43 pips down, and my risk is only 10 pips. Okay, with this setup, I'm putting my stop loss just beyond the resistance. Okay, maybe I want to give a little bigger cushion on that, a little more patience. So maybe I slide my stop loss just a little higher above this wick. Okay, if it breaks through to that point, maybe I say I'm wrong. Okay, so now if this climbs up, if it hits my entry point here, okay, and let me remove these objects, the lines, so that you can see my entry point. Okay, there you see the green dotted line. That's my entry point just before the resistance point, and my stop loss is just past it. So if this climbs up and hits this price, we have a sell trade going. What kind of pending order could we also put up here? If it breaks through this resistance, we could say, well, that's enough reason to buy. If it breaks this resistance level here, what kind of pending order would buy from a higher point? If it breaks through, hits our stop loss, and breaks this resistance, it could run up to the next resistance level up here. Okay, what kind of pending order would buy from a higher point here on the pound? Yeah, buy stop. A buy stop we could program to buy if it breaks through the resistance. So if we hit our stop loss, we get out on the sell. For the same reason we get out of the sell, you might get in on a buy stop to buy from up here because it broke the resistance. You might think, wow, then it'll run the rest of the way up. Okay, it's the idea of a buy stop. So that's a potential pending order you could set up as well. And you also, if you want to take the time, you could put a pending order down here to buy, right down here. If it drops back to the support level here, okay, this is a bit of a support level, you could buy from there. That obviously the number of pending orders you put is up to you. You can surround the movement with good technical entry points. Hussein, good question. Pending orders stay valid as long as you leave them there. You could put an expiry if you want, date and time, but you don't have to. It also depends on your philosophy, how long you want to let the pending order stay. In general, I don't mind letting them sit, because if this breaks through and hits this entry point on a buy stop up here, I don't know when that might happen, but when it happens, there must have been good news for the pound. Whatever it was and whenever it was. So I kind of refer to that as putting trip lines in the market, right? I can put a trip line up here above the resistance level that whenever it happens, today, next week, next month, if it breaks above that resistance, then boom, it triggers a buy. If I want to program a buy stop up there. And eventually it's going to hit, right? Eventually it'll cross that price level sometime. Okay, good question. You can change the sell point, the buy point at any time. That question was just asked. So I can move this on my sell limit. If I say, you know what, I don't want to sell from here, I want to sell from this point. You see it moved my stop loss, everything. You see that? I can drag my pending order and say, you know what, if it hits this price, I want to sell. You can change your mind anytime you want. It's a very good question. And so I can drag this back up. I can put it wherever I think it makes sense, technically speaking. And you can adjust that based on if you see a swing in sentiment or whatever. Okay, very good. So let's take a look then at oil, which was requested. And we see oil is kind of flattened out. Makes sense. There's not big sentiment in the market one way or the other right now. Checking your trades through the day, I keep an eye on them. That's why it's good to have like the AvaTrade Go mobile app. And as a backup, I'd also have the MT4 or MT5 mobile app, okay? So that you have multiple access points to your trades, and it is good to keep an eye on them. How often depends on your strategy, right? If you're scalping like I did at the start of the webinar, that first trade, I'm already in and out. I made my profit. If it's a longer trade that you plan to carry maybe only to the end of the day though, you're probably checking back somewhat often to find the point that maybe you decide, okay, I'll take the profit, maybe even before it hits your take profit to close automatically. Sometimes you change your mind, or maybe you're going to do a partial close, right? If you check back and you say, you know what, I like that profit, but I still want to let some of it run. How do you do a partial close? Let me show you. So if let's say I had a larger trade on oil. And so I trade 0.2, okay? And let's pretend it's in profit. I know it's not now, I just opened it, but let's pretend it's in profit, and you check through the day and you say, you know what, it hasn't reached, maybe my take profit mark was up here, right? But you look and you say, okay, it's near the first, this resistance level, and you say, maybe it'll bounce down off that one and not make it to the next one where my take profit is. And you decide, okay, maybe I'm gonna take a small profit. So you close part of it, go to modify or delete. Okay, I right clicked over the trade. I go to modify and change it from modified to market execution. It's considered a market move when you're closing part of a trade, just the same as if you're buying or selling. So in this example, I'm not buying or selling, I'm closing part. But instead of closing the whole order number that it shows here, I'm not going to close 0.2. Let me go up and say, okay, I'm going to close 0.15 and then let some of the trade run. So I close the trade size that I wanted. I took about 75%, right, or I took exactly 75% of the profit that was showing, and 25% of it kept running. So now you see that I only have 0.05 still open because I closed 0.15 of that 0.2 trade size. So you can do partial closes. And so when you ask how regularly do you check back on trades, it depends on your strategy. If you're looking to throw in some partial closes, that sort of thing as part of your strategy, then you're probably checking back more regularly. If you're just letting it run to your take profit, you don't have to check back at all. You can just let it go. And either it hits your take profit or it doesn't. So it's up to the strategy, and that's a very good question. And now maybe I want my next 70 cents profit, and there I just took the rest. So I maximized the move. Theoretically, had I closed part of it at the first resistance, and now let's say it climbed to the next resistance, and I closed and took another profit. Okay. So hey, great, we're 3 for 3 today on the simulated trades. Although those were pretty small profits, we just overcame the spread and closed it. But why do you think oil's climbing right now? Why did I choose to buy and not sell? Again, what did we look at? Positive market sentiment right now. So if you're scalping, if you're opening and closing trades short term, you take a look at the sentiment. It's positive. That's what we did. We come over and look, oil's going up. The S&P 500 was bouncing up. Why? Because that's what those assets tend to do when there's positive sentiment. Okay, so it's really a situation where you can ride the wave with these short-term trades. Which way's the wave going? You look at the sentiment and the movement, the futures, everything, and then you jump on the wave at the proper entry point and take your profit. Okay, potentially, right? Nothing guaranteed, but you just need to win more than you lose. That's the whole part of trading. All right, GBP, we looked at USD, right? And it's trying to climb, like we said, it's still trying to push up to the resistance level. You could just do a market move, by the way, and buy if you think it's going to keep climbing. You know, it's obviously entirely up to each trader when they want to get into something. Okay, so another request was Dow Jones. I think we'll take a quick look at that because it'll be moving just like the S&P 500 and the NASDAQ. You see the Dow Jones up again. How easy was that move? It broke the resistance, right? Resistance, 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 breakthrough. What kind of pending order would have opened if you put a pending order above that resistance? A buy stop. Why would you put a buy stop above the resistance? Because there's positive sentiment on the market right now. Boom, it breaks through, your buy stop opens, and now you're in the money, right? It's that simple. So now we say, where's the next resistance level? It just got to this price level. There's a resistance level soon. right up in this area, okay? Right up here's the first resistance it will come to. You see it's an old support. Support, bounced up. Support, bounced up. It took momentum and broke it. Now it just now broke back above this resistance down here, broke through. The first take profit spot that would make sense if you're scalping is this resistance level right here. That's the first old support level that it will reach. Okay, so we go back to 5-minute candles and you say, if this pulls back down, I think I want to buy, and I want my take profit then up here at this first resistance level around 28,540, right? It might just rush up there now and not give you a chance to buy from a lower point now. And that's the whole idea of that buy stop pending order. You could have already been in on this as it broke the resistance. And this is a typical breakthrough candle. You see the size of this rise? If we look at it like a 5-minute candle, look at the size of this candle compared to the size of all the prior candles here. Why did that candle break through with such momentum? Because it was a resistance level that we see here. It takes momentum to break. That's the idea of the buy stop pending order. Just above a resistance, you buy from a higher point because you figure if it breaks that resistance and hits your entry point for the buy stop pending order, that it will have momentum because it takes momentum to break the resistance. That's the theory. And many times that's what you see. It breaks the resistance, it triggers your buy stop, and it continues up. And for a scalper, that's great because it broke, the wave surged up, and you can get out before it has a chance to pull back. Okay, so very nice potential move here that could have been done and still could if it pulls back some. Could still get a nice entry point at what should be a support level now. This should be a support level down here now because it broke the resistance. So if you put a pending order at 28,490, maybe it comes back and hits that. You put a buy limit. Buy limit buys from a lower point. So if I say, okay, buy limit, pending order, if it comes back down to 28,490, then I want to buy. With my stop loss below the resistance down here at 28,460, and my take profit up at that resistance level we looked at. Okay, so if this comes down, maybe I want to cheat that down closer to the support level. If that comes down and hits this price, you're in on a buy, and your stop loss is below that broken resistance, which should act as support now. So limited risk, and you're hoping it pulls back to get a better entry point down here. Usually after a large surge, you get some kind of pullback. Okay, now it has not reached the upper resistance yet. It's up here a little bit further as I drew the line. So I think it's got room to climb still. I also feel like it might pull back some. Maybe you say, but I really want to get in on this. And then you'd say, okay, I'm going to buy now then. But that's up to each individual trader. Okay, how precise you want to be with your entry points. Obviously, if I wait for this to come down, I can risk less for a larger potential profit rather than entering up here and I have to risk more to my stop loss below the support and have a smaller potential profit. So I like these trip lines, as I called it before, to place trip lines in the market at spots that I think are opportunistic and also going with the direction of the overall momentum, which in this case is up, but still waiting for a little pullback. Marius, good question. Do I prefer the MT4 or the MT5? The MT4 has been around longer, so there are a lot more maybe indicators already programmed in the MT4 language. There are maybe a lot more options for signals, auto trading robots, algorithms, those sorts of things that have been developed for the MT4 because it's been around longer. But the MT5 is just as good as the MT4 and maybe has an extra feature or two that was added as an upgrade. And with AvaTrade, we've got hundreds of more stocks available on the MT5 if you trade on individual stocks. So you may have some reasons to have both, and there's no reason why you can't have both. Go to your client area, go to the account section, and you can add an additional account. You can have an MT4 and an MT5 account under the same user account. You don't have to open a new account or anything. It'll already be verified. You just add as many accounts as you want under the same user account from your client area. You can do that for live accounts, demo accounts, etc. Okay, good question. Okay, so let's see if this pulls back. I think it might trigger our pending order here to get in at a better price. You see, it's trying to pull back a little after that breakthrough. So it'll be interesting to see. Okay, so let's then take a look at gold. That was requested. Oh, I'm sorry, we're looking. Oh, there it is. It just took a second to load. Gold is there now. Okay, so what's happening with gold? Okay, it pulled back a little. It was climbing a little bit ago. Let's go to 5-minute candles. So it went to a high, it pulled back. Okay, so the markets do that. They swing up and down. Today hasn't been a day with huge breaking news. So maybe you trust this support level here. Okay, it's not a real pretty support level, but it's there. It hit here and bounced. It hit here and bounced. It's getting close, it bounced. It's testing. Maybe I cheat it down just a little bit. If I can get my line to highlight, there we go. Now I can drag it. So maybe this is a better spot for support. Okay, we see a bounce here, a bounce here, a bounce here. And so it looks like this might try to test a little lower before it goes up. So maybe you put a pending order on gold, 1907. If it hits 1907, I buy. Okay, fine. So how do I buy from a lower point? That would be a buy limit. 1907. If it breaks the support and hits 1905, I'm out. This is a scalp move example. 1905. And if it does hit this support, the last time it bounced clear up to here. But let's say the first resistance I see is around 1910. So take profit 1910. So now I'm going after a $3 per ounce profit, and I'm risking $2 per ounce. Okay, if it hits my price down here, I'm in, right? If it just climbs now, maybe I'm in anyways. Maybe I think gold should go up because after all, it is a pandemic. So maybe I buy now because I think maybe gold should rise. The US dollar's been somewhat weak. It's a pandemic. So I buy on a market move. And then if I'm wrong and it comes down, I re-enter at a better price, right? There's nothing wrong with that. Market move backed up by a pending order from a better price. So there goes gold trying to surge up, and it almost overcame the spread already. And I've got it backed up with a pending order. So maybe I put my stop loss on this one at the same spot as my pending order at 1905. So the idea of that sort of move, oh, I accidentally put a sell. I'm sorry. That's why it's in the negative. Let me close that. I meant to say gold buy. There we are. And then I meant to, sometimes that's what happens when you're talking and looking at two screens, reading questions and trying to place a trade. So I meant to say buy on gold and stop loss, obviously below the entry point, down at 1905 or so where my pending order has it. And then if it drops, like I suspect it might, I can re-enter at a better price, right? Or if it goes with the sentiment now, great, I at least got in. So splitting the risk, one from a non-preferred entry point, but wanting to catch the wave in case it rides up now, and the other from a better entry point in case it pushes down to that support level. So sometimes you can divide your strategy and go with a market move backed up by a pending order from a better entry point, okay? And there you see why sometimes you have to make sure you're focused, as I accidentally opened a sell instead of a buy. But there we are. So we've got our market move and we've got our pending order backing it up. If we look at the bigger picture on gold, we see it's at a spot where it looks like it broke this resistance. You see here a wick. It broke above that today. So it looks like the next resistance level's up here, which would be way up around 1920. Okay, So it looks like it's trying to maneuver its way up, but you don't know for sure how far it'll go the other way before it could potentially reverse. So obviously you manage your risk, right? And these are scalp moves. So it looks like it's going to open our pending order. There it went. There's our pending order. And now we're in at a better price. And so I suspected that would happen, that it was going to test the support. Indeed, it did. And now maybe we'll get a nice bounce off the support as we see that second trade start out and profit in the right direction. Okay. And you can compare those two entry points and see the difference between being patient, waiting for your technical entry point where you prefer, or getting in maybe a little early and having to be more patient. Okay, and everyone has a different strategy on that, a different tolerance as to how patient they want to be, how many moves they want to get in on, etc. Okay, any questions before we end things? The take profit on the Dow, we could look at that real quick. Let's look at the Dow Jones. If you got in on a buy, I'm assuming you're talking about because of the broken resistance, and here it goes up. We looked at that. The resistance level, the first resistance level is this red line I drew. So you see it's an old support level here, and then it broke under. So when it gets to that spot where this large candle plunged, there you're going to find some resistance in this area. So if you're scalping, that might be a spot 28,570 or 540, something like that, where you might think about taking profit. But if you're more patient, then a more major resistance level is up here. Okay, a more major resistance is up here, which then's not a scalp move. That's more of a patient move. You'd be waiting for it to rise clear up to here, which might not happen for a much longer period of time, right? And that's the difference between getting in and out with quick profits or being more patient for a more patient style of trading. All right, everybody, thank you for joining. I appreciate the good questions. I appreciate the attendance. We'll do another session next week. I believe the sessions are on Tuesday and Thursday. So check out the schedule. It's a little bit different moving forward. All right, bye for now, everybody. You're welcome.